Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Welcome to TradingView YouTube and to my subscribers. How you guys doing? Welcome, welcome, welcome. All right, so some good news. I got my family out of the Ukraine. It was a long 26-hour ride to Lviv, and then another hour and a half to the border, then 5.5 hours to get through the border, then another 5 hours to Warsaw. It was just. But the good news is they're out. Bad news is the war continues, at least for now. A lot of people are suffering, a lot of death. It's horrible. So let's hope this ends here shortly. All right. So what's going on in the markets? Well, it's being held up by this upper trend line. That's what's happening. Okay. Um, it bounced, came back down like a magnet. All right. So uh, to me, it feels like this is 2007. Well, we kind of like, okay, we kind of know what's going on. The housing is kind of coming down, cooling off. We have some bank problems. We didn't even know what a fucking credit default swap was back then. We were like, the market's not really tanking. I don't know. Maybe I'll nibble here a little bit. Nibble here a little bit. And then we just kept nibbling and nibbling until we blew our accounts out. So that's what this kind of feels like. This great big pink elephant in the room. We kind of know it's there, but nobody's really paying attention to it. Um, my guess is we're going to end up something like this. Now, that's what I think is going to happen. But again, if you don't have the evidence and you can't, it's a great theory, but you need evidence. You need evidence. Theories without evidence are useless. So that's keep that in mind. But that's what it feels like. It just kind of feels like there's just so many things that are wrong from an economic standpoint, world trade, inflation, the war, bond prices, interest rates. Bond bond interest rates are like gravity to stocks, right? They're rising. Mortgages, it just really feels like 2007 to me at least. And I'd rather be wrong and you guys make fun of me and be like, oh, Nick was an idiot. Ha ha, look at the market. That's fine. But I'm not going to take you down with me uh, saying like, oh, don't worry about it. Everything is fine. Looks great. I won't do that. So this 14,000 area is very important in the NASDAQ. Cryptos. I know everybody wants the cryptos. If you go back to last 2 weeks ago, whatever, um, we had the red roof in, right? And the red roof in corrected, which is what it should do. But it was very tight, very tight. I didn't like it. And I said, I'm not buying this breakout. I don't mean literally buy it, like I'm not believing in this breakout. And sure enough, it hooked over. Um, because it didn't look right. It didn't feel right. And we ended up like this now, right? Where we have a big thrust down move. Okay, this is one. This is the compass, right? One, two, three, up. This whole thing now is a two, and it's pointing upwards, which means the next move is going to be down. That's what the data says. I'm extracting. I'm not applying my vague hunches and feelings, but that's what it says. Same thing if you take a look at Bitcoin, same deal. If you look at Ethereum, same deal. Okay. Uh, so I hope it drops. I hope it drops. I really do. I hope it tanks so I can buy the living shit out of it in a wave three. I do. I hope it does. I hope I don't hurt anybody in the process, but this would be just beautiful. So just making you aware, and that would coincide with what's happening in the Nasdaq as well, right? That it's holding up, it's holding up, it's holding up, trying to hold that 14,000, but eventually I think this is going to happen. Um, Buy the dippers are going to get destroyed. I'm telling you, they're going to get crushed. But we need evidence. All right, let's continue here and let's talk about commodities. All right, look, Everybody keeps telling you about, oh, inflation. No, it's a base effect. It's going to start to come down. It's going to, maybe it does. Maybe the base effect is going to make it come down from 8.5 to, let's say, 5. Well, that's not necessarily good. It's not like prices are going to come down. They're just growing at 5% instead of 8.5%. So I don't know what these people are thinking in their heads. And still, these are the same people that were telling you, oh, it's transitory. Oh, it's just supply chain. Not that there wasn't some supply chain issues, but not enough to cause all this inflation. That has nothing to do with it. The real reason we got inflation is because we excessively printed endless of trillions of dollars, 8 trillion in 2 years. We passed it out like candy. There was no equivalent economic growth, and we ended up with more dollars chasing the same amount of goods and services. So you end up with inflation. Now, remember, every time a dollar is created, it ends up in the graveyard of savings, right, to the top 5%. So what are they going to do? They're going to go out and they're going to buy stocks, bonds, commodities, and real estate, except they haven't been buying commodities in 13 years. And suddenly, in 2021, they started that those dollars started to flow inside of commodities. Commodities offer you a 0% coupon. Guess what? The bond was giving you 0% coupon as well, just about, right? So why not buy what's undervalued, which in this case was commodities? And if you go back and you look at this is back from April 28th, 2021. I was showing you right in here, right in here. I said, look, there's a breakout. That's bad juju. Bad things happen. We're going to get inflation, and you can read it down here, right? Um, that's not good. The next likely move is to the upside. What happened? Bam, to the upside. Uh, and when you get inflation, you end up with some kind of fuckery, right? Some kind of um, global social unrest, like the Arab Spring. We last time it was the Arab Spring. This time it's World War III, just about. I call it World War III because everybody's going to be affected by uh, commodity prices and inflation. So when these people are like, "Oh, it's the base effect. Don't worry about it," 5-year expectations are this and that, and they make a big deal about it, tell you a great, cute story about it. But if you understood why you had inflation and just kept looking at commodity prices, you would just kind of brush it all off like you don't know what you're talking about because they don't. No politician is going to come out and tell you, "Hey, we screwed the pooch because we printed too much and gave out helicopter money and money to everybody." And that was Trump, by the way. It's not Biden. Don't blame it on Biden. Not that I'm political, but that's a spade is a spade. Uh, so we ended up with inflation, and that was April 28th. Like I said, we ended up with inflation, and then everybody, every single other week, oh, we peaked out, oh, we peaked out, oh, we peaked out. Again, now we're peaking out because of base effects. Well, how do you know that? Now we're going to really have uh, monetary and I'm sorry, supply chain problems, the real kind, right? Not that bullshit that was telling you before. No economist, no politician is going to come out and tell you that, hey, we screwed it. We screwed the pooch. We printed too much. No, they're going to give you some other story. Supply chain. Yeah, right. Now you're going to see what supply chain problems are. So as long as this CRB index continues to rise, don't expect inflation to go down anytime soon. And we really don't even know what the real effects of you know global trade and supply chain is going to be reshuffled. And look at the producer price index today in Germany, 33%. I mean, Christ, what's going on hither? Then you hear other people are like, oh, we're exporting our oil. We should keep it. Remember that Keystone pipeline everybody was crying about that was going to create like 32 jobs or something? Everybody, we don't have oil. What happened now? Oh, suddenly we have oil. Of course we have oil. Well, we should be selling it to the rest of the world. Really? You want the rest of the world to collapse? How is that good for America? It's not. What you want to do is you want to sell that oil internationally, keep the global economy going as best you can, and make and sell it at top dollar. You're selling oil now at 100. You know. Now, what's stupid about it is if you have a supply chain problem, you don't want to release the reserves to keep demand up when you have a supply problem. That's stupid. But whatever. Now, the flip side of being a net exporter of oil now is that you're strengthening the dollar. Look at the dollar. Dollar's going up, right? So that what does that mean? That means you have a stronger purchasing power. And if you look at the chart, right, this is the compass. This is one compass. One, two, three. Guess what the next move is? Yeah, exactly. Up. Wave three up. So, you're going to get a correction because anytime you start getting these kind of, the erection moves, right, where it goes vertical, you'll get a correction of some kind. But if this breaks out, oh, that's going to increase our purchasing power. That's going to, you know, it's going to create a lot of problems for emerging markets because emerging markets are dependent on foreign investment capital, right? So if we start taking, if that money leaves the shores of emerging markets back into the United States and they're starving for dollars and our dollar is rising like crazy, you think Sri Lanka is bad? You think Turkey is bad? Oh, forget about it. It's gonna be another Asian financial crisis. And again, you don't know if that's going to happen, right? You know that it could happen. You're aware of it. It's not a model. It's just what would happen if the dollar were to continue to strengthen, interest rates continue to rise, right? That's not a model. That's why I don't like models. Models they work great inside of an incubator if all things line up and this it's like astrology and shit, right? There's a but saying that hey uh, inflation is the next worst thing other than a nuclear bomb going off, right? Charlie Munger said that, and it's true. And we had the Arab Spring. Now we have World War III, right, with Russia. That you can forecast. High inflation is bad juju. You can also forecast that if the dollar continues to rise, you're going to have some kind of emerging market crisis. Look at Lebanon. It's already happening. Look at Lebanon. Look at Sri Lanka. Look at Turkey. And this bullshit with like, oh, look, Putin is so smart. He's such a bright guy. Look, the ruble's right down to 80 again. Ha ha ha. See, sanctions are not working. Oh my God, I want to pull my hair out. Like seriously, are you kidding? Why don't you go to Russia and try to get $1 with 80 rubles? Go grab 80 rubles and go buy one singular dollar. Good luck. Good luck. This is not what you can actually convert rubles to dollars in the real world. In fact, I can't even trade this. If you can, great. But what the real exchange rate is, because of capital controls, ruble to dollar is about 50, 70, 100% more. So if you think that the ruble is not going to go to 51, 63, 180, I think you're fooling yourself. It's a mistake. Conversely, though, if you look at the hryvnia, which is a Ukrainian currency, I actually literally did convert uh, dollars to hryvnias at 29.5, which is exactly where it was before. Okay, because they have access to the reserves. Okay, there's no problem. There's no capital controls. So don't be fooled by this Putinism propaganda that, oh, look, he's so smart, it's 81. No, it's not. No, it's not. So anyway, I'll stop talking about that. Um, let's take a look at the 10-year. Okay, 10-year 3%. We go back to my older videos. I've been saying this is going to go to 3% with its eyes closed. And here we are. Okay. Now the problem is if it breaks out. That's the question now. Is this sucker going to start to break out? Because if it does, oh, 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 that's going to be painful. That's going to be painful. That, yeah, well, we'll see. We'll see. But I can tell you that the mortgages have broken out. The 30-year mortgage has broken out. And just like I showed you with the CRB index, okay, when that starts to break, it has a tendency to run for a while. The question that I get is, well, why aren't home prices falling? Because it's not a light switch, okay? And it's actually higher than this. It's 5.20 today. It was 5.35 yesterday. Is it going to hold? Is it not going to hold? I don't know. But what I can tell you is that back in February, I think it was February. Let me see if I can get this to work. Back on February 5th of this year, I pointed out that new home prices had fallen about 10% just like that. Right? Brother Noomsi, just like that. Golden child. Anyway, and since then, guess what? The market has rolled over. We have a double top, right? You see new home prices? And they're starting to head south. So this was kind of the canary in the coal mine. And I'll always try to give you the best analysis I can, but I'm always going to tell you got to wait for the evidence. I think we have pretty good evidence that, you know, that things are not looking good. Let's just put it that way. Now, if you look at the new home sales today and mortgage application, look, the trend is down, but it's down within a range, a normal range, right? So it kind of goes within a range. The recent trend is to the downside. So if we start seeing new home sales, break that range, start heading south, mortgage applications start, breaking down and heading south, then you can pretty much say that, home prices are going to start to fall as well. Now there's some more things to that, but I won't get into that. It'll just get too complicated. We don't have enough time for that. Inverted yield curve. A lot of people made a lot of noise. Oh, look, it popped. It's not inverted, and don't pay attention to that stuff, guys. Please look. It's when it gets down to this inverted yield curve, this flat yield curve deal, it stays there for a while, and it's going to be in a range. So why would this time be different? But again, people they sensationalize things. That's how they keep themselves relevant. They talk about every nook and cranny, and you know they're talking about the wrong things, and that's a problem because it confuses people. Um, Look, everything is a word problem. If you understand the word problem, you'll find a solution to it. But you got to know the components and what to look at. Uh, it's the same thing with inflation. CRB index is rising. You're not gonna see less inflation because CRB keeps rising and rising and rising. Why? Because of deficits, excessive deficits. You can say whatever you want to me until I start seeing the CRB index roll over. I'm not going to listen to a damn thing you got to say because you don't understand what the problem is, right? So this is what I mean. But you got to understand the components. Very important to understand the components because uh, then you can figure out the word problem. All right, gold, so disappointing. I mean, still bullish, but so disappointing, right? Hasn't done anything, and I got some slack from somebody because I didn't agree with this chart when I was talking about that. Look, you're better off in stocks than you are in gold, right? Because look at it, it hasn't done anything, it hasn't gone anywhere. Stocks are still better than gold, period. And I mean, if gold is not going to break out now, when is it, right? And it's got to make a nice big move to the upside relative to the Nasdaq, and it hasn't done that yet. I mean, I'm still bullish on gold, but again, stocks are better than gold. And gold hasn't done anything in, Christ, 11 years. Look. It's done nothing. So you're holding on to gold. Anyway, take care.